You ever get that feeling in the market, like you're playing chess, but your opponent is a supercomputer that knows your next move before you do? Yeah, for a lot of traders, that's exactly what it feels like. A constant fight against these invisible, lightning-fast algorithms that just always seem to be one step ahead. Well, in this explainer, we're going to pull back the curtain on how those machines actually work, and more importantly, how you can use their favorite tool to trade right alongside them, not against them.
Okay, so let's just get this out of the way. That feeling of being outmatched, it's not in your head. It is absolutely real. The simple fact of today's markets is that you are trading against machines. The data is clear. The huge majority of trading volume isn't driven by human emotion anymore. It's driven by cold, hard code.
And the numbers? They're pretty staggering. When Ken Griffin, we're talking about the founder and CEO of Citadel, one of the biggest market makers on the entire planet, testified before the US Congress, he dropped this little bombshell. He said that 60%, maybe even more, of his firm's trades are done through program trading. So no, this is not some small corner of the market. This is the market.
But you know what? Right there in that exact same quote, the guy who defines the problem also hands us the key to the solution. See, he didn't just say program trading in general. He got specific. He named their weapon of choice, VWAP trading. And folks, that one little clue, that changes everything. So that leads us to the big question, right? If these massive institutions are literally telling us they use the volume-weighted average price, or VWAP, to execute their huge orders, what exactly is it? And how can we, the individual traders, turn their institutional tool into our own personal edge? Okay, so at its heart, the anchored VWAP is just a way smarter version of a simple moving average. Because instead of just looking at price, it weights every single transaction by its volume. Think of it like the financial center of gravity for a stock. But, and this is the game-changing part, you don't calculate it from the start of the day. You calculate it from a specific, significant event, like an earnings report, a huge news catalyst, or a major market low. But the power of this thing goes so much deeper than just a line on a chart. The guy who really pioneered its use, trading veteran Brian Shannon, he calls it the ultimate sentiment tool. Why? Because it just cuts through all the noise, all the news, all the opinions, all the analyst ratings, and it gives you a direct, totally unbiased look into the market's collective mind.
And its power really comes from the fact that it's built on the only three things that truly matter in any market. Number one, you've got price, because at the end of the day, price is the only thing that pays you. Number two, you've got volume, which tells you the conviction, the raw emotion behind those prices. And number three, you have time, which is represented by that anchor point, that one specific moment when the whole story, the whole supply and demand picture, changed.
So what the anchored VWAP really is, it's like a transparent ledger. From the second you anchor it to a chart, it's telling you the average price paid by everyone who's participated since that point. And that's not an opinion, right? That is a mathematical fact of who is winning and who is losing.
And this leads to a beautifully simple test. If the current price is trading above the anchored VWAP, it means the average person who bought since your anchor point is making money. Plain and simple, buyers are in control. But if the price is below the AVWAP, the average participant is underwater. They're losing. Sellers have taken over. It's really that clear.
Okay, so we get the what and we get the why. But how do we actually use this thing like a pro? This is where we need to break down the actual strategy that separates the professional traders from the amateurs. And here it is, the single biggest mistake that retail traders make. They blindly buy at the VWAP line. They see the level, they put in a buy order, and they just hope it holds its support. The pro approach is the complete opposite. A pro will wait for the price to pull back to that level, and then they watch. They wait for proof, for evidence that buyers are actually showing up to defend it before they risk a single penny of their capital. This entire professional mindset is captured in this simple but incredibly powerful three-step playbook. First, you anticipate. You see the AVWAP on the chart and you identify it as a key battleground, but you do nothing. Second, you observe. You zoom in, you watch the price action. Are buyers holding the line, or are sellers starting to punch through? And then, and only then, after you see clear confirmation of strength, do you participate. You enter the trade with your risk clearly defined.
You see, at the end of the day, using the anchored VWAP isn't really about just drawing a line on a chart. It's about a total shift in mindset. It's about adopting the disciplined, evidence-based approach of a true professional. It's about moving from a world of guessing and hoping to a world of anticipating and confirming. So,
let's nail this down. Here are the key rules for your new trading rulebook. Number 1, stop trying to buy the dip. Start buying proven strength after the dip is held. Number 2, live and breathe the anticipate, observe, participate framework. Number 3, never, ever put your capital on the line until the market itself proves your idea is right. 4, use the VWAP as your unbiased guide to who's in control. And finally, maybe the most important rule of all, listen to the message of the market, not the noise in your head.
So, all of this really boils down to one simple question you have to ask yourself, and it gets to the absolute core of your entire strategy. Are you trading based on hope, on what you wish the market would do? Or are you trading based on cold, hard evidence from the price action itself? Because the answer to that question might just be the difference between failure and lasting success.